Stay with these, the technology stock table. I know you were at the NASDAQ yesterday watching a lot of these big names that we follow. Let's bring in right now Paul Dietrich. He's CEO and Chief Investment Officer at Fairfax Global Markets. We're seeing the NASDAQ pointing higher now this morning. The analysts keep saying technology stocks are overvalued. Do you agree with that?
Some technology stocks are overvalued. I mean, you have to understand that 5 stocks, Apple, Amazon, Facebook, Microsoft, and Google have made up basically 40% of the performance to date of the S&P 500 and 55% of the NASDAQ. And so these stocks, they have very, very high PEs. Some are 2 or 3 times the average price-earnings ratio. But if you take out those 5 stocks, the rest of the 495 stocks in the S&P 500 and the rest of the NASDAQ, they're pretty well valued in terms of their forward PEs.
Paul, I think what you're talking about, we begin to talk about pullbacks for some of these FANG stocks, if you will. The Netflix was near a correction at one point yesterday, which would be a 10% drop from a recent high. But if you look at the tech stocks that are in the S&P 500, 4 of them are in bear market territory. So my question to you is, are we expecting a tech correction? Will we stay at a pullback? Where do we go? Do we buy on the dip? Do we rally from here? What happens?
I actually think we're seeing a sector rotation out of tech, and much of the reason is that most analysts believe that we are going to get corporate tax reform, if not this year, early next year.
So to financials, where's the money going out of tech to?
It will go in. It's going to go to stocks that actually have most of their earnings here in the United States. If you think about it, most tech stocks, they pay very, very low marginal tax rates because most of their earnings come from outside the United States and they simply don't bring it back into the United States. So Microsoft and Apple have, 2 to 5% marginal tax rates when the average S&P company is around 25%.
Well, Paul, what if we don't get, let's be real here. What if we don't get meaningful tax reform? That is the biggest fear right now.
I live in Washington, D.C., and so if you talk to most people, they do not believe that we're going to get individual tax reform because you have Elizabeth Warren and Bernie Sanders, and they won't get 60 votes for individual tax reform. But for corporate tax reform, even most Democrats believe that our marginal tax rates, which are the highest rates of any developed country in the in the world, that's causing job loss, and they're going to vote for it. And I believe that's going to go through. And those companies that have almost all their earnings in the United States, they're going to go down from 35% and 15 or 20%. That's all going to be
And that combination,
earnings.
Paul, I'm so sorry we're out of time with you, but that combination is really what would make the entire equation work. And I know you've made that point in your research. Paul, thank you very much.